Right. So hopefully, so I had to do this video like several times. I'm going to go over my analysis for this trade that I took. Don't mind all the writing, but as we get into it, we are trading on the micro Nasdaq. It's about like I think it's $1.25 contract. So two micros in a volatile market is still pretty good with a just a regular E-mini and like a I want to say just like NQ trading on the symbol NQ Nasdaq. I think that's $12.50 a contract. It's more likely to, and obviously this would have been probably 3,000, but because I trade on micros allow more space for your analysis and your trade to play out. That is the most important thing. So I just wanted to kind of touch bases on what I was thinking when I took the trade. This is all for documentation purposes. I am not an expert. I've been trading for over 4 years, and I notice more significant improvement when you don't give up and you don't let the psychological part tear you down, right? I had to figure some things out, and as a man, that was like eating me alive, like, honestly. So you see all these trades. I feel like these are incorrect because I didn't take these many trades in July. I only took probably like six trades, maybe seven. I'm not even sure. It wasn't that many, and I know for a fact I went green. So, um, for M&Q, I'm looking at the month. I'm looking at all the months, and we just keep trending up. Like, this is kind of like a steady pattern. And then my first thing was to mark out range. So that's why you see this sort of scale right here marked out range. I did it from candle to candle. I think you can do it from like wick to wick, but I did it from candle to candle. And my only concern, especially when we are in a more premium market, is to buy at a discount. You want to buy low, sell high. So I marked out this monthly bullish fair value gap down here. This portion doesn't matter. And this part of the candle doesn't matter. It's a fair value gap within here as well. This is the only thing that I'm looking for. And as price is kind of trending down, was what I feel like is going to happen is it's going to eventually um, go into an AMD phase, and I'll explain that as I go down to the weekly, and that is going to look something like this, in my opinion, because we're kind of consolidating, going back and forth. We haven't broke below this, and we haven't broke above this. We have equal highs. So what I'm thinking is because we have a slight downtrend, is that the as this accumulation phase is coming to an end, and who knows when, but I feel like it will be over pretty soon. It will manipulate into a point of interest down here, and that's the monthly bullish fair value gap. Manipulation always goes to a point of interest, liquidity, fair value gap, order block, and then it will distribute to its real target. So right here is technically where I would want to be in. It's the pivotal moment. That's where the rich people they pivot, right? When things get tough, it seems like all heck's breaking loose. The rich will pivot. They don't stress. They understand what's going on. So reading price action from left to right, consolidating, kind of consolidating slowly in a downward trend. Hopefully, we eventually manipulate into a point of interest, and then I'm at the pivot, and then I'm off to the races for distribution. Now, if I was a scalper and I decided to do a longer trade for maybe a month, a week or so, this would be my target. The low hanging fruit is your target that uh, is above or below, from recent price action is showing us. So this is like my analysis. This is what I'm using. The AMD is a method also called the Power 3. And as showing you guys this, as I go down to the daily, we see the same thing. And we see this low right here that was last created, and then we see this high. Prices kind of within hasn't broke at all. It's within that this candle. this candle's low and this candle's high. So that's another thing to be mindful of. Right now, we could be breaking below this. That would be something to pay attention. And then a liquidity target right here. And then once we do that, I know for sure. But as you can see, prices kind of, it went up, went down, went up a little bit, couldn't break, couldn't hold, then it's going down. And it looks like it will break eventually through here. We never know. It might do a little bit more sideways actions, or it just continues to go down and do exactly this method, the power of three. So that's what I'm looking at. And I'm like, all right, cool. I went from my monthly, my weekly, my daily. Now let me go to the 4 hour and see what we have. Now, as you can see, I have all the sessions in an indicator lined up. And my biggest thing is to understand what is going on during the sessions. Your married time frames play a big part. And as we get down to a smaller time frame, 4 hours, this was our range, but now I feel like this long drop from this top of the candle all the way down to this bottom of the candle is our range, and price is still playing within that range. Now, if I were to trade on something like this, you do have a bearish fair value gap, and this is the portion that makes the most sense because it's the premium. This is the discounted portion, but this part is the only part I would be looking at. Now, honestly, um, price kind of went above a little bit. So I didn't catch, I don't think I caught any of these trades. My biggest thing was just to monitor, just to see where we are at. But if, as you can see, price has now broke above, I mean, broke below this portion. So as price pulled back, boom, it went up. Another little slight pullback. Then we tried to go up. We did break above a little bit, and you want to go by candle bodies. As we broke above with structure, now we are seeing price go down. And if a candle is holding below a low or high, that's a break of structure. It's a sweep. So, and then we're going to go into levels. And I think that's a big part. So I'm going to go into the 15 because the 15 is married to the 4 hour. And I kind of like being on that side of the fence. And I'll show you guys exactly what happened today with my trade. And as you can see, where the arrows are, this is where I traded. So I'm looking and I'm like, all right, so if I were to do a controlling range, and it's something I'm learning, dealing range and controlling range are two separate things. As you learn market structure, controlling range makes more sense. I use these as my controlling range, I believe, or they could have just been my dealing range. And I think where my alerts were my more so my controlling range. This can be considered a dealing range, but we did break above these equal highs. Um, as we broke, price went up. We didn't get in like an immediate pullback into anything, not until we reached right here. And as you see, price broke below, came down, hit this fair value gap, price continued to go up, but it for some reason it couldn't sustain. And I was looking for a break. And that break came very good. Once we broke below here, I said, you know what? Let me go down to my 1 minute. And on my 1 minute, I seen market structure and it was very clean. I said, you know what? I can take the trade because it looks like my analysis is playing out. And we have the New York lows, which is this low right here. That's the last low that we created in the New York time session. And as sessions hunt each other, I know that Tokyo was going to hunt New York's lows, continue this trend. And let me go into, let me see if I can catch this. Right, show you guys. So if you see where I was at, um, price created a break right here, dropped down, pulled back a little bit. I entered the trade right here. And then it decided to kind of like do its thing. As you can see, this is a 2 to 1. I made sure to make it a 2 to 1, and I could have just held it and made like $600. But I've been very content just taking $300. I have a big habit of taking just $300, and the only time I see myself taking more than that is if I leave the trade and I just kind of go about my business. But I said, you know what? I'm going to watch this trade. I kind of chimed in. Oh, I chimed in. Oh, I gotta hurry up. Um, when it was necessary, and when I found out it was necessary, how much we have? I got 8 minutes. Price uh came down. It went back up, came down a little bit. I wasn't really scared. I had my stop loss. On the 15 minute, it was, where was it? My stop loss was kind of like right here, this portion. And as you can see, we ended up doing pretty well. Like I said, if this was E-minis, this would be $3,000 trade, right? But we got in right here. Price came up a little bit, and then it just continued to steadily drop. It got out at 304 or $312. I got over a little bit over because we have to consider that commission. I think they take like $3. I'm not really sure about the number, but they do take commission. So anytime I'm aiming for 300, I have to aim a couple dollars higher. As you can see, price came back up, but there is something that is preventing price from going up any further. There could be resistance, there could be an order block, something. Price went all the way back up. Look, boom, another. It dropped again. Then you have market structure play out right in front of your face. Price pulls back, boom, we drop. We continue to drop. So I could have held this. I could have held this all the way until New York lows. That's why you see this 2 to 1. The 2 to 1 is to hit that New York low, which was a little bit below here, which we would end up doing. So as you can see, you can look at that, and I'm not going to keep it any longer, but that was my trade, and I'm going to document as much as possible all my trades for my own learning purposes, for me to look over anything that I could have done better, maybe holding it a little bit longer, waiting until it gets to like $400, and then waiting, taking 300 from there. But that's it. It's your boy Chase Bank. It's a nickname everybody gave me, Chase Bank, when I was going kind of growing up, Chase Manhattan. I'm sticking by it. you know, Significant when you're messing with money, right? It makes sense when you're messing with money, but this is for documentation purposes only. If you do want to study these things, you have to be consistent and you have to not give up. The psychological part is going to be the biggest part that you're going to have to get over, and you're going to have to learn how to navigate through your emotions, to put those emotions aside and read what the chart is telling you and be patient. All right, everybody, thank you. Peace.